Hello, hello, everyone, and welcome to October 9th, Winners and Losers. TLT is pushed back to the 38% line. It goes for the punt to keep some profit. So let's go to the chart. Here we are, and there it is. There's our situation, and it's reached our punt line right there. We are Tigers are owed 100. We are still in the Tiger League. We are owed $105 in debt. We're 175 ahead. So we get out maybe $50, $60 profit, but the important part is we get back our 105 that is in debt, and TLT then gets retired off the loser's circle, or loser's list, down to the winner's circle. All right, let's go on here. There were no exits today, so we'll be able to go on from there. And our next one of interest is the ETF for real estate. And finally, real estate is getting there's been a lot of talk about, is a recession coming? Is real estate ready to go down? You know, it is what it is. We do what we can. We are here. Now, our defense is still long here. And it's long for a while until it was able to get past the long side of the defense on this side. We get up in here, we'll start moving our up position and maybe even get into a punt position. Who knows? All right. Now we'll go into our losers for today: Edison, Pepsi, and Dominion. So we'll start off with Edison. I guess not people using electricity. There's a situation there. And MACD isn't doing the greatest. Oh, I'm sorry, that's volume. MACD's here. Yeah, we got volume down here. So we have, this is ATR, which is the average true range between one point to another. That's an absolute number. So it can go from a high number down to the bottom to a lower number to the high number. The bottom is the absolute number between the travel between open and close. And then, or I believe it is. And then I don't pay much attention to what it measures. I do pay attention of the average true range, because I wanted to see if I can get some kind of handle of where the possibilities could be the exit. Okay, so we are doing a put call here. This is a put, a quick call, a put. So we are looking for this to go further down. And look, the Catholics and the MACD are trending into the down direction. Volume is off. So possibilities, we might get ourselves back on track, and our stop is on the opposite side of the price channel this time. You guys have been used to seeing the price at the bottom because we've been going uptrending. Well, now, because of the indications of the market and my scanners, we're going to be looking at doing these puts. All right, that said, let's go on to Pepsi. Now, Pepsi started off with some possibilities right there. This is a good, nice push, but apparently it wasn't enough to sustain. We are still down here in we're in the stop limit of about 215, which we're gonna have to wait it out. It owes 488 to the Tigers. It's 120 behind. Total of about $600. So there's, I mentioned earlier about the ATR. Well, if I do the ATR, I go like this and say, okay, I'm here at this closing price, which is about 130. So we're $600, like I said, $600. We have an ATR of 2.1. Divide that by 2.1, and technically we're 284 days out, but not really. What you got to do is you got to measure the distance of your from here to the 600. And I'm sorry, I'm a little bit under the weather, so I'm not thinking too clearly. I apologize, but there's a formula to it, and that's what it comes down to. But we're dealing with options. That's another thing. We are $600 in options, and we only have one contract, which means that we need $600 divided by 100. We're looking for a $6 move on the option. $6 move on the option means that we, on a base of a 50 delta, we're looking for about $12 in movement from here, from this close. So we're looking for $149. Now, did Pepsi ever been there? Well, one way to do it is to go back in history. You have to go back to the time frame on Thinkorswim. Go back, let's say a year, do the OK, and now you can bring it over and say, okay, Pepsi, did you ever break 149? We'll put it right about here. There it goes. That was an old Fibonacci. And no, it has not. You can see that this is going to be an all new time high for Pepsi. Now, as I said before, and you've seen it before, if I don't get the whole 448 on this trade, but I get some kind of profit, as is the TLT, that's okay with that, because we just chipped this rock down to a pebble, and then we're really able to close it out. All right, that said, we're now on Dominion for a put. And see, because of that time frame thing, you have to do it that way, or you zoom in. There we go. That works. And here's the loss leader. We have about 221, and we're looking for a put. Now, if you follow me in the last few days, I did admit I made a mistake getting into this trade. Why? Because I'm above the 30-day moving average. The 30-day moving average is a very popular and very potent measuring that if you're above it, you go positive, and below it, you go negative. Essentially, if you're above it, you go to calls. Well, I unfortunately did a put, which was my fault. Do I live with it? Yeah, because there's potential here. And the reason there's potential, number one, you can see that the MACD is struggling trying to get into the positive territory. Stochastics is already in the high zone, and the volume is leveling off. So we'll just have to do is wait out. But what will I do? Well, if we can get a movement, if we can get a price break below this line here on the midfield, then I will move my stop down further. All right, that is it for the Tigers. Let's go over to the Alpha and see how those guys are doing. And oh, believe me, that is not a pretty picture. All right, let's start off with Walgreens. Walgreens was a put. Let me reset my time frame so that we don't have to do too much zooming in. All righty, there we are. Walgreens was, but here's something. The upper barriers are starting to collapse, and once enough pressure comes from the top side to the bottom, to the top of the price up here, forming a resistance or a ceiling, then price will be pushed further down. And you can see we have some very good indicators of that situation possibly happening. And as I mentioned before about the MACD, my MACD is set up, you can do this in Thinkorswim, that when it's trending down, you can have it change to another color. And that's what I did here. So it's trending down. All right, let's go on to Nike. Nike is a call, and Nike is becoming a bit of a disappointment. Well, no, look at that. It's got a doji in the up direction. How interesting. We're behind 6 expirations in January. Who knows? There might be a chance. Nike does owe us 1010 on top of 262 outstanding. That makes it 1672. So we'll no 1272. My apologies. So but this is not encouraging, and our defense is still way down here behind field. Now, when will I move it up? I'm looking. I need a break above these barriers. Once it breaks above this resistance, this is resistance here. These are my resistance lines. So then I'll get to move here, here, and here, and then finally get to the punt. The punt team is the low of the candlestick or the midfielders if they're in tight enough range. That's what I would call it, the punt team. All right, going XLK. XLK is here, and we are doing it's a call. All these are calls now. And you can see the market's really not sure what direction it wants to go with technology. We have some encouragement here with this, and you know that when I have this kind of action, as you saw in my earlier videos on T minus, it's a jalopy, and there's nothing more you can do with it because it's going over a rough road, and we have to deal with the rules. XLK is the December So what will happen will be is that come mid-November, and we're still in early October somewhat, the bottom line is that we'll start then looking toward shoring it up, because why? Time decay will be eating at the option. All right, moving on, PG. Let's see what PG is doing for us. Okay, good. We got a good connection tonight. The stop limit is set at 230. PG is at 375. 230, 375, about $1.20 in some kind of defense there. Nice action here in this direction. So this is a little bit concerning that we have a little bit what they call divergence. Divergence means that the price is going up, but the stochastics and indicators are going down. They're now in a tug of war. So somebody's going to have to give. And hopefully it will be priced with a momentum of volume. Going on, we now have quad. And we'll see how long it's going to take to get up. All right, we got our data, and there it is. And let's get that pan control. And funny, this is really strange. You don't usually get a pattern like that. But look what's happening here. Oh yeah, and this is down at the bottom. It's in the basement, and our defense is 180, and our O is, so we have about 50 cents in defense on the stop limit. So let's see if we can get a push here and get out of this. And now remember, am I sweating too much on this? Not really. They don't, our text didn't pop up, but we are 1735 here. I think quad was like $400 if I'm not mistaken. So let's call, round it off. Oh, round it off for numbers. We'll say it's 2100. I mean, we'll get accurate numbers tomorrow if they pop up. We have oh, there it is. There it is. Quad O is 418. All right, nice timing. Nice timing. So let's do this. So 418 plus behind 1735. 21. I was close. I was going to figure 2122 divided by 1,300 shares. Remember, one contract is 100 shares in options. And we need $1.65. $1.65 divided by the delta. We need about $3 on the price action. $3 on the price action, and the ATR is 43 cents. So divide that by 43 cents. And we're looking at about 7 days, 7 to 8 days in a normal ideal world. And there's nothing ideal about stocks. Last and final is life, the XLT for health. It's also a call, and it owes 410, and we are down 15. So we're about another 2,000, 10 contracts, about $2. But this is very interesting. We have an inside day, a doji inside day, which is potential that the trend is ready to change. And that's what candlestick reading is about, is understanding where these guys appear and how to read them. Do we trade off them? There are some traders who do. One of the theories is the doji trade. That is, you put an entry point here, you put a stop here, price breaks to the upside. It's called a straddle. You buy actually 2 contracts. One contract you're buying the long side, which is the call, and one contract you're buying the put side, which is the downside. And whichever contract gets triggered, you go with it. Some traders will actually play both. That's the straddle. A true straddle player will let the call goes, and he'll hold on. He'll hold on to his put, because whatever goes up comes down. And if he has enough time, then he sets himself up a nice target to take profit on the up call and wait for the down. Now, if let's say it never comes down, he still makes money because he's paid for the both sides of the action. What's going to happen? hopefully an explosive. And then the other one goes valueless, 0, but the other one then goes up. So that's the idea of the straddle, is to play to both sides. All right. Well, that concludes today's winners and losers. I thank you very much and keep tuning in and trade well, trade smart, but most important, trade smart. Thank you and bye-bye. Uh-oh. I forgot to end this properly. Sorry, guys.